Hello. Welcome back to the show. This is my first TA video. This is the Euro USD. I'm swing trading this. This is on the 4 hour. We're on a 4 hour time frame. Let me zoom out. Look left. So this is. Let me get rid of this. This is where we're at right now. It looks like we're at a peak, a high, and I'm saying this is at a peak, a high for the euro because of a few things. One is the monthly. We're going to look at the monthly. We have been in a descending trend right now since, let's see here, about April 2008. And we've been in a parallel channel. Zoom in a little bit more. As you all can see, we've hit from the last high to the swing low, we've hit I want to say this is 60-something percent retrace. I got a lot of Fibonacci up in here. Let's see here. See if we get that. What's that? I think it's a 50. No. Wow, I can't even see it. That's what happens when you have too many tools on your charts. Now I think this is a 50% retrace. I want to. Let's see here. Nope, that's about a 60% retrace. Yeah, about a 60% retrace. You have to go into the objects tree to get rid of some of it. Actually, what I should do is take it off the monthly. Let's see here. Take it off the monthly. There we go. Yeah, so we've been at a 60-something percent retrace. Last month in July. Today is what? August 9th. Last month of July, we've seen the candlestick spike through the upward bound of the parallel, descending parallel. And this month so far, we got same spike through. We made slight higher high. We go back to the daily, I believe. Yep. So this is what you're saying. This is that first green candlestick right here on the monthly, and this slight higher high is right here. I think that's about I think that's about a 3 pips. 3 pip high. No, wait. It's about 10 pips. So on the monthly, we're in over, get my stats bar out here. We're in overbought territory. On the stochastic, we're at 82.97, so we're officially in overbought territory. On a weekly, we are definitely in overbought territory. On a daily, we are overbought-ish territory. So I think this will be going down. The price will be going down right now. So this was the high, that green candlestick from the monthly. This right here, you're seeing this on a 4 hour as the representation right there. We did go down. This is about 150 pips right here, which would have been a nice move right there. Nice gain. If you trust your TA technical analysis, about 190 to 200. Yeah, but as we all know, you don't get every bit, so you would probably got in about right here and got out maybe right here, give you about 130 pips. It retested that high again as a confirmation and got rejected. So right now, as we're sitting on this Sunday, a confirmation of the high is in. It made a double top, and as you all know, with a double top, let me look that up for you all. Double top pattern. How to play a double top. So a double top and double bottom are reversal chart patterns observed in the technical analysis and financial trading markets of stocks, commodities, currencies, and other assets. So this is a reversal pattern, a double top pattern, and how to trade a double top pattern. What you do is, and zoom out a little bit, what you do is you wait for what you want to. I got a lot of things in here, but follow me here. What you want to do is find the bottom between the two tops. So this would be the bottom between the two tops. And if the price come down, and right now this bottom is acting as support. If the price comes down and breaches the support, it'll back test it. And if it treats it as resistance, you know the reversal is in. So right now we got potential double topping, but also because the euro is inverse to the Dixie, dollar has been falling. Dollar has been falling. And I thought I saw a three rising valleys pattern. You got a low here, higher low here, and it was a higher low here. Zoom in a little bit. I'm trying not to rush this video. Look at my time, I'm doing good. I want to keep these videos about 20 to 30 minutes long. Excuse me. Wow. Wow. I drank some water. My apologies. This was a lower low here. Then go to the three rising valleys pattern. The three rising valleys, or 3RV pattern, consists of three higher lows that share the same shape or characteristics. In this case, the lows are narrow, consisting primarily of a single spike low daily. A series of three lows with specific characteristics marks bullish trend changes. So three rising valleys is a bullish, as you can see, spike, spike, and spike. It's a three rising valley. The three rising valleys pattern is a bullish scenario. But as you all know, with trading, it's all about probabilities. It's not about, oh, the price will reach here at such and such point in time, so put your trade in here and get out at this time. It's not about that. It's about probabilities of what a price, reading the charts, seeing what the price is telling you. Right now, on the 4-hour, we are in oversold territory. This chart, the market just opened about an hour and a half ago, and the price is doing this. Now, I also see a ascending triangle pattern right here. And with the ascending triangle pattern, as you know, neutral, it can go to the upside and downside. Me personally, I am into measured moves of patterns. And as you can see, I have a rectangle up here and a rectangle down here. That is the measure move. Those rectangles are the measure move of this ascending triangle. How I took that measure move, what I did was I just measured it from here, boom. I put it where the breakout was at, which is about right here. And if we zoom out, the ballpark of what a price would go is about right here. Now we look left to price history, we'll see. Let me put a horizontal line right here. I'm gonna put it right here where my original measure move was. I'm gonna delete this. So this measure move is this is the same size. So we look left, we'll see where that matches up to see historical support resistance. Where we at? We are on this one right here. This has gotta be some it gotta be some support and resistance. It's not perfect, but it gives you a ballpark figure. Me personally, I think it may hit right here. I want to do this. I want to go back a little further, see where we at. Okay, so that measure move will hit about right here. We also got some resistance further back, but it may hit around right here, right there. Let's see if that exactly is our measured move. I'm gonna paint that a different color. Let's see what we get here. Oh, I gotta go through this. Let data. There we go. Yep. Yep. So to give you a ballpark figure, a ballpark get out area to take profit would be about right there as a measured move. Again, measured moves are not perfect, but it does give you a ballpark figure, and that'll be about 180 pips. But now where to get in? We are on the 4 hour at least, as we all know. On the daily, weekly, and monthly, we're oversold. On the 4 hour, we're overbought. No, reverse. On a daily, weekly, and monthly, we're overbought. On a 4 hour, oversold. So this can come up on a 4 hour. It's pretty reliable. This stochastic can come up. Right now, the negative momentum on the MACD is not waning right now, but we could see a lighter histogram on the MACD in next coming hours. But this could go up. This momentum could reverse and go up, and thusly the price. Now, where to get in on the trade at? So I'm gonna go in a little bit. I usually put my sell. I'm shorting this. I'm shorting the euro. I would in a ascending triangle pattern. I would put my sell order just below the candlestick that closes outside of the pattern. So right now, this is about right there. I think it's about, I got my sell order about 2-3 pips outside of the below the closing candle. So this low is 17665. 17665. What's 3 pips below that? 3 pips below that is exactly where I am at 17635. So yep, 17635, 3 pips. Exactly 3 pips. So I want on a sell order, what I don't want to do is say, oh, as you all know, ABC pattern reversal from the previous high to the previous low. We will get between this upside down, but a 382 or 618 reversal or 50% retrace. Dow's theory, 50%, and then we may, I don't want to say will, probability we may. So what I don't want to do is on a sell order, I don't want to put my sell order up here and the price continue to go up and it stops me out. What I want to do is I want the price to fall into my stop loss. So I want the price to commit. If the price saying, well, this is a reversal pattern, and the price is reversing, we're just going to be falling down. I want it to fall to me. I want it to fall into my sell order. I don't want to predict, and because a lot of people, and I like these, I like pivot points. I want to say, well, with the pivot points, I use Fibonacci pivot points. So you got what's the numbers I got it on? What's the inputs? So the last 15 periods, it takes an average of that and gives you a mathematical output of where your average resistance and supports and pivot point would be. I don't want to put my sell order at these pivot points and say, well, I want to put my sell order right here. I think the price will touch this and then reverse. No, I don't want to. I don't want to do that. I want to keep it simple. I want the price to fall into me. And the same way, if I think the price is going up, I want the price to run up into my buy order. So I want the price to fall into my stop order. And actually I want to, this is 1753. Wow. 17. What is wrong with me? 15781. 157. I'm gonna put my stop loss at a good. There we go. I'm gonna put my stop loss there as a measured move. So like I said, it'll be 180 some pips, right? Let's check it out. About 180 some pips, which is good. Now, as far as significant areas that it could reverse or retrace and make and stop at or anything, it could be right here. Right here, we see a significant area where the price went up, back tested in the area. So around this area, we could see around this area the price may attract to. Also, we see right here, well, the price respected a resistance area, historical support resistance areas, broke out, back testing, ran up to about a 400, 500 pip. From about right here to right about here, it's about 500 pips. So those are the areas right in this area where my stop loss is at, and right here where I think the price will go down to. If we look at the monthly, like we said, the price did a 618 reversal and a measure move. So as you all know, A equals C. This is A from, as a matter of fact, let me get it out. Go to my tools, ABC pattern. Where's it at? Here we go. There's a corrective wave, A, B, and then this would be C. Around here, as you all know, A equals C. Not perfect, but gives you a ballpark figure. Let me get my triangle out. See what we're working with. Boom. Maybe deeper than that, to be honest. Oh, I'm tripping. We'll see. Wait a minute. I'm tripping. That's not right. No, I think I got a tool. I'm tripping. I knew this was there for a reason. This is what we're talking about. Yeah, that's ABC. I knew something didn't sound, well, didn't look right. So A equals C. Boom. A equals C. So if the price reverses and go down, this is about 1900 pips. This could take months. Period. Months. This A wave was from February 2018 to March 2020. From March 2020 to about, no, not March 2020. March, yeah, March. Wow, that was March. March 2020 to August 2020 was the B wave. So the C wave could be very long, could take a very long time, but I mainly trade. Wow, I forgot I did do that. I mainly trade out the 4 hour. That's what I think the euro is going to do. Again, it does depend on what the Dixie is doing. And let's go to the Dixie. The Dixie is just the inverse of what the euro is right now at this moment. We are in overbought territory. So it could test this bottom, and inversely on a EUR USD, that price could retest that high, and we could see a fall of the euro and a spike of the dollar. This is the DXY dollar index. So this is my first video. We'll see. And because of the correlation of the euro and the dollar, those two are the most liquid in the Forex. I don't want to guess that the price will go up here and get me in and then it'll reverse, because at that point I'm telling the price what to do. I want the price to tell me what it's doing. If the price goes up and continue to run up to whatever point, I'm out the trade. I never was in the trade, because I want the price to fall to me. But if the price does go up to here, we'll see what happens. I may go long instead of shorting, but as of right now, I'm short the euro and long and vice versa, long the dollar. As of right now, we'll see. We will see. Don't forget to like, comment, subscribe. I think I'll be doing this more often. Never know. All right now. Peace.